As North American traders enter for the day, the U.S. dollar is marginally lower, just a little bit versus the three major currency pairs: the euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar. Take a look at each of those currency pairs from a technical perspective in this video to kickstart your trading day in the North American session. So let's get started. Retail sales will highlight the economic releases today. The expectations for retail sales are minus 0.1 for the headline number. Ex-autos up plus 0.3%. We also get import and export prices in the U.S. Coming out at 8:30 a.m. Canada has manufacturing sales released at 8:30. So that's what we have to look forward to. The U.S. dollar, as I mentioned, is a little bit marginally lower in trading here today after an up and down session. Yesterday pushed the price of the euro versus U.S. dollar to the upside. I'm looking at the hourly or 4-hour chart actually in this chart because I wanted to take a look at this swing area through here. The swing area was defined by a number of different swing lows and swing highs going back in time to these periods right through here. I'm outlining all the times that the price came, in that area or very near to that area. You can see more recently, a couple weeks ago, it came up to that level and rotated to the downside last week. Came up short of that level, rotated down to this week, and today we're moving above that level. On the 4-hour chart, that area comes between 1.0457 and 1.0467. Breaking above that level is more bullish and opens the door for a potential move toward this swing area up here, which had peaked at the 1 point or on a couple weeks ago peaked at 1.05. Looks like 32. The area, the swing area comes between 1.05. 32 and 43 on the top side. Get above that level and we start to look toward the 38.2% retracement of this longer term move to the downside from the high price that we saw in September 2024 to the low price that we saw in January of this year. That would be the minimum corrective move and would signal further a move above would signal further bullish momentum. You can see just above that level is a 100-day moving average, however, so we do have to get above those levels. That probably won't happen today. That would be something that we would aspire toward next week if the price is able to get and stay above this area right through here, or more conservatively, maybe even this swing area down here, which was a ceiling in the short term, including a high this week before moving to the upside. That area comes between 1.0432 and 1.0441. So buyers are making a play in the euro versus US dollar. We'll see if they can keep that momentum going through the economic data today, through the end of trading today. Let's take a look at the dollar versus yen and this currency pair. I'm going to take a look at the hourly chart on this pair because it's you can see more clearly in this chart what I was focusing on yesterday coming into the day was this cluster of moving averages on the downside, and in trading, we were trading, probably somewhere around this level at the time, and when the price started to rotate to the downside, we came down into that area and found support at the lowest of those moving averages. That would be the 200-day moving average, the green line in this chart, and then we bounced a little bit marginally higher into early Asian session, and in trading here today. The high prices, you can see, came right toward the high of that cluster moving averages, the 100-day moving average, and then rotated back to the downside. As you can see, we've fallen below the 200-day moving average on 1, 2, and now we're back up retesting that 200-day moving average to keep the sellers more in control and push this price even further. Staying below the 200-day moving average would be the best case scenario for this pair. But you can argue that if you're bearish the U.S. dollar and bearish the U.S. dollar versus yen, staying below any of the all of this cluster of moving averages would keep the bias more to the downside, or at least keep the sellers in play. I wouldn't say, if we get above the 100-hour moving average, maybe it changes. It's more the buyers are more in control. But this area is resistance that you don't want to see move above if you want to see the U.S. dollar move lower. Now, if you want to see the U.S. dollar move higher, of course, you want to see the price get above these levels and start to push back toward the 38.2% retracement of this move to the downside. If it could do that, then we should be going higher from there. This is a key break, so we need to get and stay below this level to increase the bearish bias. If we are able to do that, moving down toward our low prices is not out of the question either today or going forward. So be aware of that dynamic in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I'm going to take a look at the 4-hour chart again. Why? Because we're breaking higher and we're moving or move toward this next swing area target. Going back in time and take a look at that, like the euro versus US dollar, you can look at different swing lows and swing highs. This was support here, resistance here, support here, and then resistance through here. That was the last time we extended toward this level. And as you can see, we moved up toward the low of that area at 1.2596. The 38.2% retracement of this move to the downside is also in that area at 1.2607. And the high of the swing area comes in at 1.2614. So between 1.2696 and 1.26147 are a number of different technical levels. If we're able to get above that level, we start to look toward here and here, including the falling 100-day moving average. We had a similar look in the euro versus US dollar, where a daily moving average is way up there or up higher that we can aspire toward. That's only if the dollar starts to see further downward pressure, and we could expect that's a sort of retest going forward. Probably not today, but going forward, certainly a possibility. Conversely, if we can't get above this 38.2% retracement, then this is just a normal correction in what has been a downward trend, and we start to rotate back to the downside with this swing area down between 1.24739 and 1.25. Remember, 1.25 as a key target on the downside. So there you have it, a look at the three major currency pairs to kickstart your trading day ahead of retail sales. My name is Greg Mikulowski. Good fortune to trading. Bye-bye now.